Hello and welcome to another episode of the Investor Financing Podcast. We have a great guest. We're going to talk about multifamily from both a attorney's perspective, and then put another cap on from a multifamily perspective, and then put another cap on from a mentor's perspective. We're going to get a kind of a deep dive on somebody who's been involved in over $3 billion of transactions, not necessarily as a GP, but as an advisor in these or consultant in these transactions. Which is probably going to give us a lot more insight because he's giving the kind of the bird's eye view of some of the deals he's seen and some things that he's seen go wrong, and some information that might help us out there as we're starting to raise capital for deals and put deals together. You got to make sure you're doing it by the books, guys, and you're always should consult an attorney whenever raising any kind of capital. So welcome to the show. Charles Dobens.
Thank you, Beau. Thank you. I gave you a ton of topics and you picked that one. You couldn't go in with like the plane or go up. You had to talk business. Okay, fine. All right.
We'll talk planes too, because you should fly here. Where are you located?
I'm in New Hampshire right now, and I keep my plane just south of Boston, but
so if you ever fly here, I'm in Las Vegas. We in Henderson, the next city over.
Oh yeah.
We have the executive airport. You can fly right in there. We can have breakfast right at the airport. It's pretty cool.
Yep. That's what I fly all around. Go to nice breakfast. We call it the $200 hamburger. It's what it is.
So thanks for joining us.
Sure.
We have a lot of investors that watch the show. A lot of them are, there's anywhere from the fixer flipper guys to the short-term rental people to the people that are scaling up their portfolio. They might have a bunch of duplexes and fourplexes, and they're like, hey, there's a better way. We want to invest in multifamily. And now they're looking to potentially raise capital and so forth. So I know you really mentor people in that stage where they're ready to kind of expand from somebody that doesn't really know much about investing at all. Maybe they have some capital, to somebody who's more of an operator. And can you kind of walk us through kind of your framework of the advice you would give to somebody that's, wants to grow and get into bigger deals and start looking at bringing in either joint venture money, or when do you think about syndication and so forth?
Yeah. So usually, you start out small, or some of these people go big or go home. It's really up to you where you feel comfortable. Everybody's coming into this arena from a different perspective. If you've got those people that are doing fix and flips, listen, I teach people how to own 1,000 apartments in 5 years. And the way I do it is you start with 20 in the first year. That's all you need to do. But if you want to go big, early on, that's fine. You just got to make sure that you've built a business, a very credible business, because you're going to be out there talking to investors about putting their money with you. You better look competent in running a multifamily real estate investing business. So don't just, fly by the seat of your pants. Make sure you set your business up correctly early on, and that'll make it a lot easier for you to go out there and sit in front of an investor and explain to them why they should be investing in multifamily and why they should be investing with you.
Yeah, that's good. So somebody like me, where I've raised money for, like a flip deal where they were essentially debt. I wasn't doing any sort of securities or anything like that.
Yeah.
If I were to go into bigger deals, and maybe is your framework, when do you figure out if it's a good idea to go with a JV opportunity or a syndication? What's the kind of difference in thought process between the two?
Okay. First off, the 30,000 foot view is, what kind of business do you want to be running? Do you want to have a bunch of people sitting on the sidelines telling you what to do, looking over your shoulder, making sure you're doing everything right, calling you up and say, hey, why didn't I get the return I was expecting? I mean, there's a downside to the syndication business. Or if you just want to be your own boss and you just want to, I have a great video that I did with a couple of my clients. I have 2 clients that come at this business with polar opposite positions. One of them owns an interest in up to 6,000 apartment units. He started with me with 0. He owns up to about 6,000. Another one owns 200 units. Here's the difference. And the name of my video is A Tale of Two Investors. One investor syndicated everything. He does not own one property alone. He's in there as a partner with a whole bunch of other investors. The other guy borrowed money from his father-in-law for the down payment on value add deals, went in there, rehabbed everything that he could touch, he rehabbed it, refinanced the property, paid off his father-in-law, and those 200 units he owns by himself. That's it. So there's a big, huge difference. That guy's in total control of his business. He runs everything. He has done a fantastic job. He and his wife run the business themselves. That's the way they want their business to run. As opposed to the other guy who wants 6,000 lives, he wants a little bit in a whole bunch, and he, puts together the deals, keeps the acquisition fees. That's his model. So it's really wherever you feel most comfortable. And that's the beautiful thing about multifamily is you can design it any way you want. You just learn enough about it early on to make the decision as to which direction is going to be the right one for you.
Yeah, that's really good. I like that. Is that on YouTube by chance? It's in your coaching. Okay.
No, send me an email, Beau. I'll send you a link to it in my
yeah, no, that and the interesting thing is too, the gentleman that's got the 200, he might be making more money than the other guy. And that's the thing, that if you're syndicating deals and you have multiple GPs and a lot of people brag about how many doors they own, really, exactly. But I go, it's not really the doors you own. Like, what does that mean in dollars in your pocket net exactly. with the amount of time you have in the deal? So that's really, because I think if you go on to LinkedIn and places like that, you see these people talking about the deals, and there's like 8 co-GPs in the deal. What's really coming into your pocket is the question. I guess that's
exactly.
So
I just talked to a student looking to come into my program this morning, and they're like saying, well, we haven't really done anything because none of our partners can agree on anything. I said, how many partners do you have? 7. I said, okay, you know what? Just stop right there. It's never going to happen. It's just never, if you have to get everyone to agree, it's just never going to happen. So just blow up that partnership right now. Don't even let it go any further.
Has anybody ever told you sound like Robert De Niro? I'm thinking you sound just like Robert De Niro.
No, but I thought I was the only one that noticed that. And I can tell you something, Beau, I think that's over time. I'm starting to sound more like Robert De Niro. Didn't always sound like this. But I am getting that gravelly voice.
No, it's good.
I use it effectively too. So,
yeah. So take us back. So how long have you been an attorney, and what kind of got you to become the multifamilyattorney.com?
Yeah. So at 97, graduated law school. And at the time I was making so much money in a particular aspect of the insurance business. I said, I can't afford to go out and be a lawyer. So I ended up starting my own insurance business, insurance benefits administration, did that for 10 years. Worst business in the world, Beau. Absolutely the worst business. I was turning 40. I was miserable. I had 35 employees working for me. I told my wife, I'm going to end up in an early grave if I keep doing this. I just can't keep doing this. And she says, what do you want to do? I said, I've always, and this is a true story, I've always wanted to own apartments. And she goes, okay, let's do it. So I sold the business, and that gave me enough money to go out there and start buying apartments. So that was pre-last crash. And so I owned a lot of apartments, I think over 1,000 at the height of the market. And then the market crashed. And I was friends with a lot of multifamily investors, and I kept some of my properties. I had to give some of my properties back to the bank, but I had a lot of friends in the business who were going through the same problems. And they said, will you represent us as an attorney to, help us through this process? And I said, yeah, absolutely. I'd love to do that. And that kind of, got me practicing multifamily transactional law. And I can tell you something, Beau, at that point, it was a foregone conclusion. All they had to do was protect their individual assets. The properties were going back to the banks because of what had happened in the market. And what I saw in that case was a lot of people who had done bad deals. And I said, why? I know you're going to give this back to the bank, but why do you do this deal in the first place? Oh, we're going to do this. We're going to add this. We're going to, throw. It's like, that was never going to happen. I could have told you that, you were just, that was pie in the sky. And I said, I need to teach people how to do this business correctly before they get into trouble. Because after they get into trouble, it's the die has been cast. So that's when I started coaching people. And that, I tell you something, it has been an absolute blast. I love it. And it reminds me of when I was first an insurance agent, my manager, who's still a friend of mine to this day, I asked, he was a successful insurance agent, and then he went into the field and went into management. And I said, why'd you leave the field to go out and be a manager? And he goes, I enjoy seeing you succeed. And I thought that was the stupidest thing I'd ever heard in my life. As a 22-year-old kid, what would this guy care about watching me succeed? And then fast forward 30 years later, I love seeing my students succeed. I love hearing them that they got their first deal. I love helping them every step of the way through the process. That's what gets me up every morning, is to get out there and help people.
That's awesome.
Yeah.
And so we're in an environment right now where people are starting to do bad deals, it looks like. And so, and a lot of people, even though I'm 44, I was in real estate early. So I experienced the 2007, 8, and it was and I was in the residential lending business. So that business froze.
Yeah.
And it was complete chaos. And a lot of people like that I'm interviewing on my show, they got started in real estate in like 2019 and 20. You know, and it's like, we got 100 or 1,000 units now. And it's like, you guys have only seen the good markets. Just wait.
Have you ever had to go up to the door with a sheriff and evict somebody?
Oof.
I mean, yeah. I mean, I got to show the same thing. I got people calling me up trying to get on my podcast where I'm like, what have you done? Oh, we're syndicators. Like, yeah, but look at, Paul Moore, who right here wrote this book, good friend of mine, Perfect Investment, Multifamily. Paul Moore, he just posted a blog post on Bigger Pockets where he talks about exactly what you're saying. And he said, many of these people out there, 10 years ago, they were still in school. 4 years ago, they were in a W-2 job. Now they're acting like experts as syndicators, and that they can do no wrong. Beau, you're right. I'm seeing some really bad deals being done right now. And it's just a matter of time. It's just a matter of time.
Yeah. Yeah. I still have that because I felt a lot of pain. I was in my 20s and I remember I had to give a lot of houses back, and it was just it was a painful time. And I'm lucky I was in my 20s, because I know a lot of people in their 50s and 60s that lost everything.
Exactly.
I think multifamily, like it's a little bit more resilient asset than single family, just because you got more, more heads under the door per se. But, people are buying deals. I don't know. I think the biggest thing we're going to see, and this is just my opinion, is that all these people doing heavy value add with bridge debt and they underwrote to like a 3.5%, agency takeout type of loan or whatever. Well, that's all going to change in the next year or two. And like, what's that going to look like? Their debt coverage isn't going to be, that's just one of the things that's probably going to go on. But even in a market like this, there's still opportunity. There's always opportunity. And so, just providing the people, and a lot of the people you probably coach and mentor, it's like more of a mindset thing. It's, the numbers are not that complicated, really. It's just overcoming your fear of how to negotiate, how to bring in money partners. And so what is the framework of your coaching program? What's kind of like the nuts and bolts? How do you like arrange your content and distribute it?
Yeah. Okay. So I have a platform where all of my students come together in one. They get all the training all in the same place. They all meet each other. They all can become partners. I love it when my clients work together with other clients. So that's the platform for my coaching. Within that is all the training, and the training works such that I take you through section by section, and you cannot move on to the next section until you've gone through all the other sections and had a meeting with me. I want to make sure that you're going through the process and doing everything correctly. I don't want these people flying through the training without getting the basics down. You have to go out and choose a market, and then I become an expert in that market. And then you and I get on a call, and you got to sell me your market. If you're going to go out and raise money and sit in front of a bunch of investors, and you haven't done the basic training on understanding what your market is like, then you're dead in the water. You're never going to get to that 1,000 units. And then the other thing is that I look at every deal my clients do. They have my cell phone, they text me, they contact me, and they submit their deals into the coaching platform. And then I instantly get a notification that they've uploaded a case. I jump on it. I take a look at it. Go through the numbers. I make sure they wrote their offer correctly. I make sure, when it comes time to do the purchase and sale contract, my clients don't send out a piece of paper until I've had a look at it. And because I do not want them to make any mistakes. And the idea is to get them to the closing table as smoothly and as quickly as possible. And that starts with making sure that they've written the offer the right way. And so all of that technical stuff, I've got you covered. You are going to have the more confidence to do anything in this business than you can imagine. But here's the difference. Here's one of the biggest things that I do differently is, with a background in insurance and watching and helping so many investors, I have found that the common denominator among all successful investors in my field is that they come to the business with a sales and marketing background. They understand that, it's multifamily, but you got to prospect, you got to knock on doors, you got to pick up the phone and call people. It doesn't just drop in your lap. And so that student that's got 6,000 units, when the first phone call I ever had with him, I knew he was going to be a success because he had 30 years of sales experience behind him. And so what we do is I have created a customer relationship management tool just for my clients. And we focus on the 3 customers in the multifamily business: investors, property owners, and brokers. And brokers are customers only because they're agents for the owners. But those 3 types of people we focus on and we market to. And so when you sign up on board, you get one of my VAs. One of my VAs is your employee for your marketing department. And the first thing they do is we look at your market. We look at the type of property you're focusing on, and using our database of CoStar, we upload into the CRM up to 1,000 properties in your geographical area that meet your criteria. And that becomes your closed market that you will be going after for the next year. And we have set up with a direct mail program. You can turn on the direct mail program. My VAs will call the owners. You work with the VA, you talk back and forth, you send each other tasks, what you want them to do. So when you come on board, you instantly have the sales and marketing department up and running for you. And that's the key. And the reason being is I have a guarantee in my program. If you don't own your first property in the first 12 months, you don't have to pay anything more to me until you get it done. So that's how my program works.
That's freaking awesome.
Yeah.
I mean, I like it because I'm a big advocate of using virtual assistants and like,
yeah,
I haven't heard somebody that has that built in the multifamily kind of coaching space, which is unbelievable. I mean, it's just like, because at the end of the day, you can educate the shit out of yourself, right?
Yeah.
And if you never take action, and you're going back to what Gary Vaynerchuk says, we're all sales and media companies, right? That's essentially what we are. So it totally makes sense.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
So what's the difference between the Academy and the War Room?
Oh, the War Room was the program I did with my partner, Jillian Sidoti. And we did that for about 18 months. I had done my thing is the Multifamily Investing Academy.
Mm-hmm.
I had done that for 10 years, and I was, let's try something new. And Jillian was coming out of her law practice. And I said, listen, I am strictly transactional law. That's my focus. I don't do anything with securities. She does securities. We put the two of them together. We had, great success for 18 months, but I thought, I'm not I missed the old way that I was doing it, where I was working directly with clients, working on their deals, and having that control. So I said, I'm going to get Jillian. I love you, but we're going to break it off here. We're still great friends. We talk all the time, but I've turned on the multifamily OS, the multifamily operating system, because I felt that what was lacking in all of this training was how to build the business of multifamily real estate investing. I told people, I taught them early on how to own 1,000 apartments in 5 years. But you got to build a business to get to 1,000. You don't just buy 1,000 properties and walk in the management office the next day and everything runs smoothly. You got to build it over time, because once you get it built, it's the greatest business in the world. But I want to make sure you do it correctly. And then we weren't focusing on that in the war room. And so that's why I turned on the multifamily OS. And it is exactly what I've always wanted to do. I wake up in the morning, I can look at all of my clients, where they are in their process. I keep track of what's going on. I shoot them out task messages. Hey, haven't heard from you in a while. What's going on? Let me know what's happening. It's just, I really, really get to work with my students. And Beau, as I tell them, my students will confirm, you're only going to need me for your first 2 deals. After that, you and I are just friends.
And so you have students that are buying like 6 plexes, 12 plexes. Then you have some students buying 200-300 unit properties.
Oh yeah, it doesn't matter to me. I've done them all. The smallest I did was for myself personally was 40 units, and the most we did was about 800 units personally. So I can handle. They're all the same. They're all the same. It's just how you want to structure your business. And I had one student that bought a $27 million portfolio in his first deal. And I was like, really? You want to do that? And he says, yeah, I think it's easier to do that at that size than it is to do a smaller deal. And I said, well, that is true. That is true. So he went out and syndicated the deal. And, a funny thing was, he came down to the last 2 weeks or something. He said, Charlie, I'm $250,000 short. Can you do anything? I said, yeah, give me something I can put on a blast email. And I sent it out to my 13,000 email database. And within a day, he had all the investors he needed to cover it, and he closed the deal. And I would do that for any of my students anytime. I just want to see them succeed. So he now owns this. But like you said before, he's the GP, but he owns a small part of that $27 million process. He might have been better off doing a $3 million on his own.
Right. And that's the question. Like, you have to look at it. And some people just want to do the syndication. They like the big, big shabab where, somebody could own 100 units total, and that could be enough cash flow, and that can create their financial independence that they're looking for. Yeah. I mean, that's what I really kind of want to break down is, what does this actually mean in a dollar in my pocket? When you say you have 1,000 units, it depends on how, if you only own 3% of that, what does that actually trickle down into your pocket? Because that's the more important thing to me. It's not how many doors I own. It's what's your net cash flow. And so that's what's important to me. So.
But Beau, you said it earlier, and you didn't state the reason why, but you said there are a lot of bad deals look like they're happening right now. And the reason why they're happening is you got so many of these people that are doing it for the transactional income, not for the investment income. They see the big dollar signs of those acquisition fees, and they're like, they can't wait for the closing table. They don't care whether it's a good investment or not. They just want that acquisition fee. That's the worst deal to get into as an investor. Don't go anywhere near those deals, because if the shit hits the fan, these people are going to be gone right away, and nobody will be left running the property.
Yeah,
ask me how I know, Beau.
Yeah, I don't know. Syndication business model is very lucrative, or can be very lucrative, right? They have, acquisition fees, they have, asset management fees, they have all these fees, but it doesn't mean it's the best model. Like if I was a limited partner, you got to look at the sponsorship team, really read through your PPM and all that legal mumbo jumbo, because you got to know what, yeah, I know on some of these larger syndications, these general partners are getting $1 million up front for a fee. It's
Yeah.
crazy. But I
But
mean,
listen to what you said. You said the syndication business model. I'm not in the syndication business. I'm in the multifamily business. They are nothing more than brokers when they're making the money from the syndication. That's all they're good for. And brokers are always good for just one transaction, and you never see them again.
yeah. There's a difference when you're a multifamily investor versus kind of like a transactional,
Exactly.
syndicator. Because you gotta be here in the long run. Well, that's an interesting conversation. It's different. Everybody has a little different taste, and you've been doing this for a long time, and obviously you've had a very successful track record. What are some kind of tips you would have for anybody that's listening that, where can they find some information where they can get some, like maybe some initial content from you and learn a little bit more?
Yeah, go to my YouTube channel for Multifamily Investing Academy. Check out multifamilyos.com, multifamilyoperating-system.com. I've got tons of, and then also make sure you sign up for my feed, because I send out weekly vlogs. And I've got, I tell you, Beau, I've been doing this so long. I got over 1,000 hours of video training out there for all different subjects. And then also, just shoot me an email. I'm very accessible. I love talking this business. I had a call this morning, went on for 2 hours. I think I talked too long, but blame it on me. But let me just give you one thing. The woman that I spoke to this morning, she has 40 units and she's disappointed with the 40 units. And she says, I have only 40 units. And it's, I'm not as successful as I want to be. And I'm like, don't you dare say that. There are people in my program that would kill to have 40 units the way you do. I say, just, don't measure the gap, measure the gain. You've accomplished so much. Let's just stay focused and grow you even further.
Yeah, no, I love that. I mean, yeah, you shouldn't judge yourself. We in this day and age, people are comparing themselves to everybody else, but really, figure out what makes sense for you. You don't necessarily need to own 1,000 units. You can have 40 units and still have enough money where you live comfortably. I mean, people we don't all have airplanes like you, right? We don't have a big stove for a head. And so, I mean, really it's about putting one foot in front of the other. And I know I'm 44 now. I know I look very young, but 44, I'm like, I woke up and I realized I'm middle age. I gotta get that retirement plan, filled. And that's not putting into like stocks and bonds, right? That's like buying real estate. So the next, 5 years of my life, heavy acquisitions, good.
But here, this is the thing that I say is give me 5 years. I can have you 1,000 apartments in 5 years, and we can start off tomorrow just looking for 20 in the first year. And then next year, we're going to double 20. And now we're going to buy another 40, but not sell the 20. Now we have 60. Now we're going to buy another 60, but not another, we're going to double it and buy 120 and not sell the 60. Now we have 180. And that's the way it works in this business. The first 2 deals are your hardest deals. After that, after the world sees that you're a performer and you can make things happen, brokers are going to start dropping things on your desk. I see it happen all the time. One of my students who just closed his first deal, 55 units, and he did it in the first 12 months. He's already got deals lined up that he's trying to get under contract that nobody else has seen, because that broker knows he can perform. And that's the way you make it in this business. Just don't blow your cover. Take care of those brokers early on, and they'll take care of you.
That's amazing advice. Thank you so much for joining the show. This was awesome. It was like having Robert De Niro on set. And if this wasn't, the video wasn't shown, I would have thought that. So anyways, any closing remarks to the audience?
No, hey, come track me down. Come out, check out my podcast. I love that they took me kicking and screaming into the podcast world. Now I wish that's all I did. I love podcasting.
Do you ever do any live events? I mean, when COVID's not around?
Yeah, we're gonna do one at the probably January of next year down in Florida, because I'm so sick and tired of these god awful New England winters. I gotta get out. So we'll probably be doing that next January.
Oh, beautiful. I'm gonna try to attend. I miss the live events. I'm ready. Everybody's ready to get back out to like meeting people and shaking hands and doing that kind of fun stuff. But anyway,
Yeah, I went to Strategic Coach yesterday. It was the first time, live event in Chicago yesterday. It was great.
a
to see
strategic
everybody.
coach. That's with Dan Sullivan.
Yeah.
Yeah. Oh yeah. Who not how. I love that.
Exactly.
Yeah, Dan Sullivan. For anybody that's not doesn't know who Dan Sullivan is, the guy is like, I don't know. You can listen to him talk for everybody. He's like an amazing business coach, like
Yeah.
one of the top in the world. And he was the co-author of Who Not How and a bunch of other new books.
Oh my gosh.
So yeah, he's like, so yeah, that's so you're still reinvesting into you pay a lot of money to go to his coaching stuff.
Yeah, but I absolutely, I would keep paying it, and that's just one of my coaches. You've got to have coaches in your life to achieve anything. You just absolutely do.
There you go. I'm glad that you mentioned that, just because it's if you listen to people that are successful, they're going to tell you the same thing. There's no secret. You need coaches. You need people that bust your chops to actually take action and hold you accountable, and just because everybody's scared. Oh, they're scared that they're going to make the wrong mistake. But that's cool that you have transactional experience, so you can review contracts. A lot of people in the education space don't have that knowledge, which is huge, right? Because contracts make people really scared, and there's little clauses and stuff that you can help them and all that good stuff.
Yeah. I wrote out purchase and sale contract to protect the buyer, and I've gotten my clients out of bad deals because of the way I wrote the contract. And that's that you don't do that by watching someone else's boot camp. You learn that over 10 years of getting your ass kicked and learning the hard way. So yeah.
Awesome. And that's so true. Yeah. Thank you so much, Charles.
Thanks, Beau.
Awesome.
Good to see you all. Talk to you soon.
All right.
See you, man.
Bye.